Good morning, party people. So I have another update on DBGI stock. It is up over 22% today. I repeat, up over 22% today. They are about to release second quarter financials tomorrow, and obviously it's going to be good. I already emailed the CEO, and he told me there's still growth coming. So definitely good news. A bunch of short sellers have been using algorithmic shorting to attack the stock and driving the price way down artificially, so that they can make money off of retail traders like me and you, just average people who they can take advantage of, and it's not cool and it should be illegal. Um, I mean, I'm being polite about it. I want to scream bloody murder at them from the top of a skyscraper in NYC. Uh, I'm not able to do that because I'm sitting here in Kingman, Arizona. But anyways, so the revenue increased by 48% last quarter, and more revenue increases are on the way. From the way the stock has been going up, and on all the insiders buying it, um, there's going to be some major good financial news. It's probably going to be revenue is going to probably even increase, not just on a year-over-year basis, but it's going to increase from even the last quarter. Last quarter it was 5.1 million. This quarter it should be closer to $10 million because of the acquisition of Sundry that basically everyone ignored, or well, the short sellers manipulated people into ignoring. And then there were these bullshit little articles talking about all the negative stuff of this stock, so that short sellers could make money and screw over people like me and you and retail traders and the CEO and the upper management, maybe even just average employees who work there, could also be in on it, deliberately allowing the share price to go low so they can buy up a bunch of shares for cheap. And actually, that's just what happened yesterday. Insiders were buying up a bunch of shares. Oh, surprise, surprise! The stock is near an all-time low, and they're about to release positive financials, so they're going to buy up a bunch of shares. And the CEO has been silent since May when the last financials were released. Even though there's all kinds of positive things happening financially, he didn't want to, contradict all these short sellers and people writing these negative articles. Well, the negative articles were like automated from these automated sites like Benzinga and fucking bullshit like that. But yeah, uh, I'm pissed off. But at least it's starting to regain some of its former value. Again, up over 22% today. That's a big deal for a small cap stock. Um, yeah, just what they did to this stock. It should be illegal. That's all I can really say. Algorithmic shorting should be illegal. I researched it. They're most likely using Python, a computer programming language, to artificially lower the share price. And it's pretty messed up. And all these short sellers were acting like this company is going to go bankrupt. It's not. It owns 5 different clothing brands. They could sell off. So right now their debt is like about 15 to 20 million dollars, I think, and they just had a waiver. They got one of their creditors to waive $5 million in debt. So $5 million in debt is gone. So that's why I say 15 to 20 million dollars, because I'm a little unsure. But and then another one of their creditors, they extended their due date by an entire year to next summer of 2024. So now they have tons of breathing room. Now they're only in debt by like 15 to 20 million dollars, and so they could sell off 2 of their brands. let's say they get $10 million for each brand that they sell off. And that would even probably be at a wholesale price. So 2 of their brands they could sell off and pay off their debt. Boom. Positive cash flow company instantaneously. So this company isn't going to go bankrupt. It's not like a biotech company that went down a path toward a cure for cancer using a specific gene therapy or whatever, and then that turned out to be scientifically implausible. And so now they spend all this money on something that has literally no economic value. And then the company goes bankrupt. They have nothing to sell. The corporation has nothing to sell off. Well, this corporation has 5 clothing brands. They're an acquisition company, so they can. That's what moving forward after they get all this new positive revenue coming in, and once the share price goes back up and all the drama stops with the share price being so low, eventually at some point next year or the year after, they're gonna get back into doing more acquisitions and possibly sell off one of their brands. Personally, I would sell off Harper & Jones, luxury men's suits. I don't really see that generating a lot of revenue. I don't really see a lot of innovation in the Harper & Jones brand. And it seems like they're kind of focusing on their other brands. Maybe they just haven't had a chance to do anything with it yet. That's probably it. So, say they sell off Harper & Jones for, that one probably wouldn't sell for as much, maybe 5 to 10 million on that brand. And then they buy another brand. So this is what I would do, okay? I would buy a wholesale brand that is intended to be brandless. No brand, just cheap, good quality clothing. That competes with Hanes or some of the other cheap clothings, but that is actually a good quality. I would innovate. I was talked about smart clothing or making clothing more efficient, and that's more stuff for another video, but for a future date. But for right now, up over 22%. That's a big deal for a small cap stock with a low float. Again, according to MarketWatch, the public float, so the shares publicly available for trading, is only over 1 million shares. That's it. Now, the total supply of shares of the common stock is like 7.9 million. So shares of the common stock are much larger, and the common stock is owned by all kinds of people, including some insiders. But as far as the publicly available float, it's supposedly only over 1 million shares according to MarketWatch. And that may be outdated. But even if it's double or triple or quadruple that, even if the public float was the same as the total supply of shares, the common stock, 7.9 million, 7.9 million is still a low float for if it was publicly traded. Obviously, the publicly traded shares are much lower. So I own a large amount of shares. I'm going to sit on them for a long time, and there was so much high volume already today that there's going to be more and more people doing this. Again, they have a good business model, acquiring brands, analyzing the revenue, seeing which ones work and seeing which ones don't, rather than putting everything in one basket like Levi's has done. They're doing some unique things, like I've said before, with the vegan leather hoodies, stuff like that. Anyways, I think I've spent enough time in this video for now. I think you guys get the point. I don't get the feeling that anyone's really been listening, and that's okay. But If you had bought earlier this week, like on Monday, I mean, you're going to be up over 22%. I mean, it was up over 22% today. If you had bought earlier in the week, you'd be up over 25 to 30%. That could potentially be a lot of money. And again, because of the low float, if you buy a lot of shares and you just sit on them, eventually, if enough people do that, suddenly the price will skyrocket out of the blue. With no news, no articles, nothing. It'll just get to a point where supply and demand will just kick in, and randomly someone will discover it and buy it, and so many people will be buying and holding on to it that it'll just suddenly skyrocket. Digital first brands, they're going to be the future. And everything, I think everything is moving brandless. And again, that's more for a future video. But signing off for now. Have a good day, people.